Silver forecast, a look ahead. January 12th through January 16th, 2026. This week is not about upside. It's about one question. Does the structure underneath silver still hold? Or does it finally crack? That's the entire week. Everything else is noise. As we head into the new week, silver is just under $80. Gold is above $4,400. Copper is holding near $6. And the US dollar index has pushed back up to 99. Those numbers matter, but what matters more is how they are behaving together. Silver is strong, gold is strong, copper is not breaking down, and the dollar, while bouncing, is still fighting an important line. That tells us something important. This move is under pressure, but it has not failed. Why the dollar still matters. Silver does not trade alone. It trades against the dollar. When the dollar rises fast, silver usually feels pressure. When the dollar weakens or stalls, silver often gets room to breathe. Last week, we said this clearly. As long as the dollar index stays below 99.50, the silver structure remains intact. That line still matters this week. The dollar does not need to crash. It just needs to stop climbing. If the dollar stalls here, silver can absorb selling and stay supported. If the dollar breaks higher and holds, that is when stress increases. What the dollar is telling us now. Right now, the dollar is testing. It bounced, but it has not broken away. This is not a victory for the dollar yet. It is a decision zone, and silver is watching closely. That is why this week matters. Gold is not warning us, it is confirming. Gold is holding above 4,400. That is not bearish for silver. In plain language, it means big money is still looking for protection. Gold usually leads, silver usually follows, later. This setup often appears before silver starts catching up. So gold is not the problem. It is part of the confirmation. Copper is quiet, and that matters. Now look at copper. Copper is tied to real things, factories, construction, power grids, physical demand. If the economy were falling apart, copper would usually show it first. It hasn't. Copper is holding near $6. That tells us the real-world demand picture has not broken down. That matters for silver. The physical signal you should not ignore. Now let's talk about something very important. Shanghai silver is trading around 83.56. That is higher than COMEX spot silver. This is not opinion. This is price. When Shanghai trades at a premium, it often means physical silver is harder to get there than paper prices suggest here. In simple terms, the physical market is tighter than the paper market shows. That does not force price higher immediately, but it creates pressure under the surface. Pressure that builds, pressure that matters. What about volatility and pullbacks? Silver is not a calm market. Pullbacks are normal. Shakeouts are normal. Fast drops do not automatically mean failure. They often mean weak hands are being forced out. This is especially true after big moves. That is why we do not panic on dips. We watch what happens after the dip. Simple framework for this week. Here is the plan. No guessing, no drama. Just 3 clear paths. Base case. The dollar stalls below 99.50. Silver moves sideways with volatility. Buyers step in on dips. This keeps the structure intact and sets the stage for the next move higher as January volume increases. Alternate case. The dollar pushes a bit higher, but not violently. Silver dips into the low or mid-70s. That is uncomfortable, but it is not broken. That would be a test, not a failure. Risk case. The dollar breaks and holds above 99.50. Selling accelerates. Silver loses support. Even then, that does not automatically kill the long-term story. It means the move needs more time. That difference matters. I'm watching 5 things. First, the dollar. Does it stay below 99.50? Second, silver on dips. When price drops, do buyers step in or step away? Third, copper. Does it stay firm? Or does it finally weaken and confirm economic stress? Fourth, Shanghai versus COMEX. Does Shanghai continue to trade at a premium, telling us physical silver is tighter than paper prices suggest? And fifth, the daily COMEX Silver Warehouse Report. This is important. Every day COMEX reports how much silver is sitting in its warehouses. There are two main categories: eligible silver, which is stored but not promised for delivery, and registered silver, which is actually available to deliver against futures contracts. What I am watching closely is silver leaving the eligible category without moving into registered. In plain language, that means silver is being pulled out of the system instead of being prepared for delivery. That does not cause an instant price spike, but over time, it increases stress underneath the market. And when that keeps happening, it supports the idea that this move is being driven by real-world supply pressure and not just paper trading. That is a secondary confirmation signal. It does not make headlines, but it matters. This week is not about calling a top. It is about watching whether the foundation holds under real pressure. That is how strong moves survive. And if you want to understand this market clearly without hype or panic, subscribe. This story is not finished, but it is being tested, and we will track it step by step as it unfolds.